Hello and welcome. The measures taken by the Central Bank of Nigeria to stabilize the exchange rate and prop up the value of the Naira are yielding positive results. In the last 1 month or so, the Naira has steadily appreciated against the dollar, regaining over 40% of its value from about 1,900 to the dollar to about 1,200 to the dollar at the moment. And in fact, the Naira is still gaining ground. The Apex Bank has now announced another measure also aimed at improving forex liquidity. It's directed all banks in the country to halt the use of foreign currency denominated collaterals for Naira loans. However, the Apex Bank listed 2 exceptions to the rule as foreign currency collateral, which are Euro bonds issued by the federal government or guarantees of foreign banks, including standby letters of credit now. This means that other than the exception now, the Apex Bank laid down now, all loans now backed by dollar-denominated collaterals must be wound down within 90 days. If they are not, the Apex Bank says the exposure will be risk-weighted 150% when calculating the capital adequacy ratio and may face further regulatory penalties. Let's discuss this some more now. I'm being joined on the program by Professor Ken Ife, who is a financial expert and the lead consultant on private sector development to the ECOWAS Commission. Thank you very much, Prof, for joining us on the program. Let us look at this latest measure now taken by the central bank. Just how important is it, and how can it help the value of the Naira to continue to go up?
No, it will help without a doubt, just as much as many of the measures being taken in the last 2 months by the Apex Bank. And you will recollect that they have actually switched fundamentally to inflation targeting, which is a different scenario, a different policy environment than what we've been seeing in the past. And they are backing it up by minute-to-minute policies to ensure that there are all hands on deck. First was that they had to increase the dollar supply. Forex is price, and in any price consideration, and a supply perspective. So we know one problem we have in our country, which is the dollarization of the economy, and then they begin to wear those. That the main flashpoint. There is also the second, the impact of insecurity on investment, but not as much the speculators in the economy, because speculation has actually worsened the situation that we have. We are no longer worrying about the value of imports, like over $4 billion requested every month for importing goods. We are more worried about the speculators, the activities of the speculators in the economy. So people are now holding dollar as a store of value and completely undermining Naira in the scheme of things. And so the bank started going out for not only the likes of cryptos and Binance, where they say they've transacted over 26 billion, within the system, and then they're also going out for the banks that have over $5 billion in their coffers, and then telling the banks to close their net open position in excess of 20%. So, which means that they recognize that they could well have dollar liabilities, but not to more than 20%. So they have to. Although I would have thought that the bank would have said, sell those to me, those surplus to me, so that I can bring them back into the market. But allow the banks to dispose, and so they dispose it the way they thought fit, which may well mean to their closer allies, and the story still continues to plague. Now, but also now it has come to the issue of the bank recapitalization. Of course, there is other things involved in bank recapitalization, because it will strengthen the banks. There is now come forward to what you have just described, which is dollar-denominated securities and collaterals, and then made 2 exceptions. Of course, those exceptions are very legitimate, because there are foreign banks operating in Nigeria who are obliged to provide securities in dollars. But if they provide it via a standby letter of credit, then it's fine. And you'll find that it is a very good instrument, actually, because the dollar is what they are used to trading from abroad. The security is actually coming from the foreign bank, and there's nothing wrong in them, creating a standby letter of credit to support some imports of into Nigeria, and or some liability that will crystallize from that. So, and I remember one good case where John Dale of America had to create that letter of credit, standby letter of credit, to support the importation of 10,000 tractors, and then created all the whole financial architecture to ensure that we will pay to stand big bank and all of that. So that worked well in theory. And then, of course, there is also government that issues bonds, US dollar denominated bonds. So you would also make some exception with those. So I'm quite happy that is the case. But it also warns the banks, give them some reasonable time to liquidate those assets, those collaterals that they have that are dollar denominated. Your time, and they failed to do consequences, because those of the bank that have the capital adequacy ratios of about 15%, the calculation of the capital adequacy ratios will have to weigh in the risk of those. So that's why he's saying they will weigh it 150%. So it's going to carry a much higher weight, risk assigned weight. So that is a clear warning to the banks to play to the rule. And I don't see anything wrong with that. But what it now means is it will reduce the appetite for dollar that are built up to go and support those collateral, dollar-denominated collateral. So it will be a big gain for us in Nigeria in terms of dollar inflows. So that is how I see those.
Prof, we've seen an appreciation, a significant appreciation of the Naira within a very short period. In less than a month, we've seen the Naira at the moment, as we speak now, out there, I think it's just about 1,100. And, there's the expectation that it is still going to go down, that the Naira is still going to appreciate. You look at what the CBN has been doing so far, and then selling FX now to the BDCs and all of that. Then you look at the system we're running now. How would you describe it? And would you say what the central bank is doing at the moment is actually sustainable? Because it seems, somehow we are depleting our FX reserve, whether we like it or not, just to support and defend the Naira. Is this sustainable? Because obviously some people have said, look, it's like we've gone back to the era now of some kind of managed float and not a free float anymore.
Well, I'm not even sure. You have to tell me which countries are doing free float. It's just theoretical. Free float. The people say it's very theoretical. You don't have an export economy. You just don't have adequate supply of forex, and you haven't done enough to dampen the appetite for forex, for dollar based assets. So you can't actually talk about free float in that respect. If we are actually exporter of things other than the oil and gas and solid mineral, whose prices are outside your control and are regulated, quota system and all of that, and you're not even meeting those quota. If you don't have solid stuff that you export, which could have poured in a lot of dollars into our economy where we are facing devaluation, then you have to think, how else would you maintain a steady supply of forex? So free float will work in a way that we will not have envisaged. So it still has to be some measure of managed float. But in that context, the governor says, I'm going to go for price discovery. We are going to see where the balance is, where supply and demand would equilibrate. And it's not just one item. Remember, forex is price, inflation is price, MPR rate is price, in banks rates are price. So all of these price mechanisms require some kind of equilibration of their supply and demand perspectives. So that is why he says they're continuing to discover where the equilibrium lies, and then under the auspices of a free buyer and free seller and all that. So that So that is an approach towards the market, towards the free market. So, but you have to unbundle the constraints that we have and all the imperfections and the role of speculators in the whole system. And that is what it is tackling, shaking down. If we are doing all this without shaking down the speculators by going for the crypto Binance kind of people, and then looking at where hoarding is going on and where those that are creating artificial scarcity of dollar and holding dollar as store of value and all of that stuff, even though they are doing it in the context of excess liquidity in the system, the bank has to go for those. And so it's this shakedown that makes that whole business unprofitable and then continue to support a gradual drop in the price of the forex. So the momentum has to continue because because of the way our financial institutions behave in this country, we have to have a central bank governor that has acrobatic mentality to be able to deal with these commercial banks and the financial institutions. I'm not surprised that you have to call in the BDCs because they are important players in this field, but gradually get them back. But it's gradual because there are some nasty side of the BDCs when you see things about money laundering and this and that and that. But that does not wipe out the contribution that they can make to the economy, especially as the lower rung of that ladder. So they have a role to play. So I'm glad that they are gradually, the CBN is gradually weaving them in and gradually so that they can find a balance in the architecture, in the financial forex management architecture. Is it going to be sustainable? I think that money will go down to $1,000, a naira to a dollar. I know it will go down to 1,000 naira to a dollar, and it may further go down because don't forget, many things are happening at the same time. The MPR rate is inching up, going up, and it is going up while inflation is going to start coming down until you get to a point of inflection. Yes, you are going to tell me that the inflation hasn't gone down, but all the parameters that will bring down inflation are now active and positive. You are now seeing that the rates are dropping, so the level of imported inflation is obviously going to come down. You are going to see that on prices, but it takes a finite time from when you have an action and going into force, and then you have a price. That's that. But you also see that some of the input costs are coming down. Diesel coming down from 1,800 to 1,000. Now that means that a lot of the input costs on inflation are going to be deflated. So you will see the inflation will come down. Then the food is also a big one. There are a huge imported processed food component of our inflation, which is active at both the core inflation level and also at the food sub-basket index. Both of them are going to come down, but not sufficiently to push the inflation down to core inflation level. But you will see some prices coming down in the next two reports.
Now, because you talked about items coming down, we've seen an appreciation of the naira over the past 1 month or so, but people are still worried that the prices of items are not coming down at the same pace. What exactly is the issue? What's going on? What's the problem?
No, okay, please. If somebody, this price started coming down, forex, only about 2 weeks ago or 3 weeks ago. But the importers that have imported their goods, imported them way back 3 months ago. So it is now they will place order with these new rates. And this order, when you import, you have allowed 2 months for the imports to come in, 3 months. So when they place order with cheaper currency, by the time it comes in, then the competition in the system will allow a free fall in the price. Look at prices are coming down on the cement. It went up to 13,000. It's coming down to 8,000. It's supposed to go down to 7,000, 7,700. You've seen the diesel coming down significantly from 1,800 to 1,000, and it might still go down a little bit because Dangote is now running. And then by the end of the month, April, NNPC refineries will kick in. So you could see some of those oil and crude and PMS, all of that starting to come down. And those are the components of the structural inflation factor. That is the cost push inflation. So it will come down. And then we also have the potential that there could be an uptick because of salary settlements in May. but that is not going to force an increase. Instead, it could level things a little bit, but it will still go down because the tendency is for it to go down. And I'm confident that there will be some show of this in the next 2 months. Is that you have to have a lag. That thing has a lag.
We'll take a short break now, but when we come back, there's something else I want to talk about, and that's about oil outputs. Why it's very important in the whole mix. We'll take a short break and we'll be right back. Welcome back. If you've just joined us, we are discussing Nigeria's forex management, of course, and I still have Professor Ken Ife, a financial expert and the lead consultant on private sector development to the ECOWAS Commission. Thank you very much, Prof, for your time. Now, Prof, let me ask. Monetary policy is obviously doing well. There's no question about that. People are still expecting that fiscal policy will kick in and begin to provide the much needed support. And let's talk about the issue of our oil output now. How critical is it? Because whether we like it or not, there's a limit to how much the CBN can actually use to defend the Naira now. But you still need forex. You need forex to begin, substantial amount of forex now to begin to come from the sale of oil. So how important is that? Well, we're still not meeting our OPEC quota anyway. So just give us a sense of how important it is to be able to ramp up our production and fire on all cylinders so that we get some semblance of long-term stability in our forex management.
Yeah, if you look at the forex picture, crude accounts for 79% of our forex. Gas accounts for 11% of our forex. That is between the two, 90%. The other 10% is within the purview of the central bank, which is diaspora remittance, foreign direct investment, foreign portfolio investment, and some of the other some of the other assets in dollars. So it's very insignificant. It's not a very significant quantity. So over the years, from 2014 or thereabout, Nigeria was, CBN was getting about $3 billion every month from NNPC. So about 3 years ago, NNPC did a swap deal with foreign refiners and pushed the crude out and then get PMS in return. Not even all the derivatives, just PMS is what they get back in return. And then they still turn back and say to government, you know what, this business, we are losing money. We have under recovery of 500 billion naira every month. So go and borrow that, and that is what they call subsidy. So that continued. So not only was that the central bank wasn't getting those dollars, but we are still having to borrow 500 billion a month to subsidize. So now, what does CBN have? So CBN gets about $1.8 billion a month. Their liability every month is about 1.2 billion. And then given the current increases in inflation and all that, and the prices, it will be about $2 billion every month that CBN needs to finance the outgoings. The outgoings also includes the loan repayment, dollar-denominated loan repayments, and also all the other importers and all import and all of that, excluding the 41 items that are banned, or not banned, but that are restricted. So when you look at that, 2 billion a month against what's receivable, I guess they're not getting the thing. They're not getting the 3 billion they were used to get. They used to get from NNPC. So they only get those little things that they get from declining FDI, declining diaspora remittance then, although now it has reversed. So CBN couldn't meet it. Then you now still have, apart from what the CBN needs, you still have about $4.6 billion every month being requested for import. Importers that are importing things into the country. And then you now have the aggravation that there are speculators in the economy that are hunting every dollar. that they can find and storing them. So when you look at ways and means, you mentioned that magnitude of money, they represent a lot part of it. It represents printed Naira. And where is it? A lot of people would have got those monies and used them to buy dollars. So you've seen the big scandal in the whole architecture. And that is what the new administration had to find and fight. And that's what brought us where we are. So is it going to be, how do we make sure that this continues to, we have a strategy with the Ministry of Finance Incorporated that says, let us look away from debt-based financing and go more to asset-based financing, because that helps our balance sheet. And we have been going that way with the new administration. You've seen the new administration securitizing, you've seen the new administration securitizing the ways and means, the first 23 trillion. The securitizing some of the revenue from the gas assets, some of our dividends and all that for the next 5 years. You've seen the securitizing some of the expected revenue on crude by Afrexim Bank. So, and then you've also had about $14 billion dollar bill deal with India and all of that. All of them are playing on the asset of government. And then that then means that is some kind of borrowing where you do not have to reflect it on your balance sheet. so it's some kind of borrowing based on your assets. So that's a different regime, and it's working. But the thing is that we have to get more at it to see how much more we can pull into that side of our balance sheet to make sure that so that's the action that they are taking, and I think it's going to be. But in terms of the increasing the level of output will help of crude. It will definitely help. The prices have gone up well over $91 per barrel. That is definitely going to help. And there are predictions that they may go as high as $100, and that will be helpful. But then with the NNPC coming into refining in the next few days, with Dangote now rolling out, now what there happens is that they will now be, and then government has also now made it mandatory for NNPC to work with central bank around those receivables and all of that. What that means is that there's greater transparency, there's greater likelihood that our forex revenues will continue to increase. There will be more accretion to the foreign reserves, and there will be more accretion to our excess crude account, and which also helps our NSIA, the Sovereign Investment Fund. So things are going to get better. They are going to get better, not worse, because there are so many balls in the air, and all of them are helping. So we see that direction of flow that can help, but the more work needs to be done, without a doubt.
If there are areas that you think we need to work on, where you want to see more work, what would those areas be?
Well, I've just mentioned the key area of asset-based borrowing, and that is a huge area. And because the Ministry of Finance Incorporated that was set up is not only to manage the assets in a very active manner, to world standards, but also to manage investment. So they will also be looking at investment, which is very important, because we have so many investments that you can't even find any dividend coming to federal government at all. And you have all kinds of people sitting on these assets, and then government gets nothing. The government pays. If you look at the likes of aviation, you've seen all the new terminals in all the international airports. Those are over $400 million. But then how is government getting anything? You've seen the railways, and they are pouring out money, providing security and guarantees. But government revenue is far, you can't find where they are in those assets. So there are more and more, but now there is what they call a sheriff in town that is now taking charge of all of those. You've seen the Gencos and Discos. They are moving forward to take control of the assets and ensure that revenues will come to government. So some of those measures are actually kicking up. And we're going to have to start seeing some revenue inflows from those. And then, of course, whatever we do to improve production will be most helpful of crude. Whatever we do to improve transparency in those transactions will help accretion. Then we also have modular refiners that are looking to play in this field. I think there's only about 2 that are actually up and running now. But don't forget, licenses were issued for 75 of those. And then we have marginal oil fields where they prefer to be located very close to so that they can get their crude directly. And I've advocated many times that we should have strategic reserves. America and Saudi have huge strategic reserves. If we have strategic reserves, modular refineries can site around those reserves and get their crude without having this long pipeline here and there, and then people keep on breaking the pipelines. But if you have some strategic reserves in certain locations, then the modular refineries could come closer to there and take their crude. It's just like having a a dam, and then people coming around the dam to do irrigation and to do all kinds of things, to do fish farming. So that is the kind of thinking that I was thinking. And also, when you have strategic reserves, you could use it to shore up your supply of crude in times of this, you have fracture. So you can go to the reserve to pull crude to maintain your quota. So that's why I keep on asking that this should be considered, seriously considered.
All right, Prof, we're actually out of time, but I just have to ask you this, because you actually brought up, you alluded to the issue of electricity when you were speaking there. And let me just ask you this. With the recent increment in tariff that we have seen, how do you think that will factor into the inflation rate in this country when the next, for instance, the next inflation figure comes out? How do you think it will play out? Won't that cause inflation to even spike?
There is no doubt that it is a major component of the input cost. But there are things that are going to be coming down and things that are going to be coming up. Just as you have seen diesel come down from 1,800 to 1,000, so are you going to see the 250% increase in electricity spike up? So they will cancel out. But what this means is this is a wake-up call to Nigerians to just take power to the mass market. We have to take. This was a call that I made within 2 weeks of the Buhari administration. I went out when I said to a major conference within 2 weeks. I said, take power to the mass market. Let people remove tax on solar-related items. Let them invest. I'm sure you may have 3 houses, one in Lagos, one in your village, and one in somewhere in one township somewhere. You can only sleep in one house at any one time. And so the rest of the power you have other places could be sold to the grid. So there are people that will prefer to use their money instead of running generator and not having anything back and causing pollution, invest it in solar. As long as the government will say, okay, in the short term, let us bankroll the cost of a meter, hybrid meter that will take this electricity back into the grid and pay them for generating electricity. And then people will begin to see value in investing in alternative energy supply sources and take that pressure off the national grid. And then, of course, the law has been amended repeatedly from 1 megawatt domiciliarization to eligible buyer, and then also so it has been amended, but you have to give that decisive push to individuals and everybody, private sector, state government, get into this business and produce power for yourself. And then let us look away from national grid, because that national grid is a monster, and the instability is so embarrassing. The collapse, systemic collapses are so embarrassing that we're going to take this as a wake-up call to go and invest whatever we can. Okay, gas is our transition plan. And why are people not going to CNG? CNG gas, the biggest asset we have as a country is gas. Over 210 trillion cubic feet of gas. I don't know why we are dealing with petrol and diesel when we should be dealing with gas. You use gas to power the buses, you use gas to power the trucks, and we use gas to produce electricity of all sorts. You have generators that are gas generators, and then you get the CNG supply, compressed natural gas supply. And people should move away from those diesels so that we can have, we can build our industries. And so the main industries can't operate at these prices right now of electricity.
Absolutely, and I think that's where we just have to end it. Thank you very much, Professor Kenife, for coming on the show, and thank you for talking to us. Thanks.
Thank you very much.
Thank you. All right, that's how much we can take on the show. Thank you very much for watching. I'll see you again next time. Bye-bye.